On the program now, if you are an ABSA account holder, you're already aware that controlling company shareholder Barclays Bank intends selling its controlling 62.3% stake. UK-based Barclays intends selling its African business over the coming 2 to 3 years. To unpack this more for us, we're joined in studio by Chief Investment Officer at, is it Clivera Inc?
Yeah.
That's right.
Yeah.
All right. Clive Ramathibela-Smith, thank you so much for being with us here on the program.
Absolute pleasure. Always a pleasure being with you.
Yeah. All right. Now, there's a lot of concerned viewers out there, and especially those that are banking with ABSA. Is there anything to be concerned about?
No, nothing to be scared of at all. Yeah. In actual fact, I reckon that the way Barclays Africa came out yesterday explaining things, I mean, there were talks all the time from the beginning of the year of what they're going to be doing. We saw the European branches also downscaling a lot, cutting down on jobs. Those were the ones that they actually wanted to cut down on. But downscaling on this African continent, it might be actually a good opportunity for other investors to get involved. But the average Barclays or ABSA account holders, they have nothing to worry about whatsoever.
But I mean, there's such a long history of Barclays here on the continent. And pulling out at this time, I mean, surely this is not a good sign for the continent.
It's not a good sign at all, Leanne. What was interesting about it is that just last year they went and changed their name, their registered name on the JSE from ABSA to Barclays Bank Africa. So that, for me, was like a sign that, you know, there's going to be further investments, there's going to be more concentration on the African continent. And they had mentioned that, but they've not been making money. So why change the name? Well, you know that the very next year you're going to be downscaling. So I thought maybe the reason behind it was that they wanted to attract investors and they thought that might work, but it hasn't done so. And so that's why they're downscaling. My concerns on the South African side is that when companies start to downscale, they look at where they can cut off. And although we were reassured yesterday by Maria Ramos that there's not going to be any cutting down of jobs immediately, at least. But the sponsorships, like, for example, the Springboks, are they going to cut down on that? Are they going to cut down on the ABSA Premiership? Does that mean that they're going to downscale on that? And who's going to be sponsoring those particular ones? And those are just a few of the big ones that I know of. And I know there's a number of sponsorship that they do. The question is, are those guys now going to be left in the middle of nowhere, trying to find more sponsors?
It certainly is a reality. I mean, when we put this departure into a number, what are we looking at? I mean, how much money is being pulled away? And as you say, I know we keep saying Africa, but the bulk is here in South Africa.
And that's very true. You're quite correct. I mean, ABSA is the Barclays Africa on South African soil is the biggest in actual fact on the rest of the African continent, and this is their gateway, for example, to get into the rest of the African continent. But what are the numbers saying? So you have to look at, I suppose, the shareholding of that 62.3% that they hold in ABSA. And so that means if they're going to be downscaling it all the way down to less than 50%, you're looking at their market cap, you capitalize that, you're looking anything between 150 to 200 billion rand over the course of the next 2 to 3 years.
Yeah, it's a significant.
It is significant.
Are there any other interested parties? I mean, can we speculate
who may
go in and take over?
Do you know, actually, what I thought was maybe it's an opportunity for a black bank or a BE empowerment deal to take place. But I don't think there's anybody who is strong enough to raise that kind of capital, specifically if you look at where the South African economy is sitting. So it's a very difficult one. I reckon that you need a sound banking partner, somebody who's done it before, who's seen it all. And maybe it's time, I don't know if the Competition Commission will allow this, maybe you look at a smaller bank partnering with ABSA, maybe you look at a Capitec, for example. That could be a strategy, you know, to get the bigger piece of the pie, to try and fight the other big two banks, the FNB and Standard Bank, for example. So I'm thinking now strategically, where would I want to position myself? But I would want somebody who's a local to be participant, but if they want to participate, you have to have somebody who's sound, who understands the banking sector very well. And we've got a number of guys who are actually quite capable in the country.
Downgrade, negative. I mean, is this just another, I hate to be so dramatic and call it another nail in the coffin.
Yeah.
I mean, is it that bad? Is this really not going to bode well for ratings agencies and their outlook on South Africa?
Yeah, I mean, it's not just the deal, is it? It's the other elements.
Yes.
So it's the fact that the downscaling on the African continent, on South Africa, and then there's other elements, the 9.4 increment by Eskom. There's the fact that we've got a slump, and we've got interest rates hikes, we've got tax that has been hiked. So all these elements now start to create what we call a snowball effect, an evidence, a trend of negativity that could lead to the guys deciding to downgrade us. But what would the downgrade mean? And that's the question that nobody's asking. Like, what would the downgrade mean? It just means that we've got bad debt, and so we can't borrow as much as we want. We cannot be flexible, and we'll have to do something to actually capitalize this economy of ours. So it is significant in terms of economic structures that when the downgrade does happen, we will be hit hard and we won't be borrowing as much money. But it's not the end all and be all. So we have to create other ways in which to stimulate our economy, to bring back foreign direct investment, for example, and to create a platform for investors on the African continent. We still are the gateway to the African market. And so we must never forget that. With all this negativity, it's not just South Africa, it is a global phenomenon. So we have to look at it from that perspective.
Yeah, it certainly is. I mean, we look at it from that perspective, but I suppose it's only normal to kind of keep focusing on our issues and our problems because times are getting tough. I mean, as you say, the increases that we're seeing everywhere, it's just, you almost think, how are we going to meet these expectations?
You must cry for the consumer.
That's
you must cry for the consumer.
The most
Somebody
difficult.
said to me yesterday, I said, you must tighten your seatbelt. And I said, but what if you don't have a seatbelt?
Exactly.
You're in trouble.
Exactly.
It's a free fall.
At least we can still laugh about it, but not that loudly,
No,
unfortunately. No. You know, we maybe some people don't even know. I mean, I know we talk about it being, I mean, Barclays has been here since 1925 on the African continent. It's a long history.
Yeah.
We can't emphasize that enough. And, I mean, they also have got shares in, or they own Barclays Bank in Zimbabwe and in Egypt, and they plan on selling both of those as well. So, you know, I can imagine these conversations are taking place all over the continent and contingency plans being in place. But again, I want to end this interview on a positive note for ABSA. The customers are fine. They mustn't worry. There mustn't be a sudden panic from all ABSA account holders that there's going to be a problem. I mean, we've been reassured, right?
Yeah, we have been reassured. And you know what? I want to say, in times of turmoil, there's always a window of opportunity. And so I want to think that what I've not liked about ABSA is the fact that they've taken the Barclays way of doing things very conservatively in terms of being behind, in terms of technology, in terms of implementation, things that are innovative that other banks are doing. And hence the reason they simply have fallen behind. I think there's an opportunity now for them to become more flexible, to create more opportunities for their client base, to make themselves more competitive on the market. And I think this particular deal will probably be one of those things that spark a new type of ABSA, and we all going to be in red. so I'm thinking that that's what you want to do when you take an opportunity like that. For the rest of the African guys, there's also opportunity. There's another chance now for the guys to take over those assets and convert them into workable businesses. And I hope that's what's going to happen.
All right, Clive, thank you for joining us here on the program. Always a pleasure speaking to Clive Ramathibela-Smith, who is the Chief Investment Officer at Clivera Inc. And your 3.5-month baby is doing you well. It's giving you lots of energy. I think it's manic, actually. I think that's what's going on.
I'm getting enough sleep.
Yeah, okay, that's the main thing. That's the main thing. All right, let's take a break here on the program. When we return, Super Tuesday. It's Wednesday here, but believe me, in the States, it's still Tuesday, and that vote counting.